Hey all, it's Andy from Saving to Invest here again. As many know, getting a tax refund is an eagerly anticipated event, with nearly 75% of taxpayers typically receiving a refund check from the IRS after they file their tax return. But this year, tax experts and the IRS as well are warning that many tax filers may receive a smaller refund than normal. In this video, I'll go through some of the common reasons why, which you can probably get a hint of in the images you see on the screen. So a big reason your refunds may be lower than expected is that you made more money than planned. Maybe because you got a big pay raise or that second job or side hustle worked out better than expected. But either way, it's pretty common that these unplanned increases in incomes, which push you into a higher tax bracket, and forgetting to increase your withholding will mean that your tax refund will be lower than expected. And in the last year, where a lot more people started their own businesses, got a lot more self-employment income, I expect this to be a big reason that refunds are lower than expected. Again, it's really important that you always adjust your withholdings every year. You don't want to give too much because then you're giving a free loan to the IRS, but you also don't want to have too low because you could either have a low refund or no refund at all. So it's really important that if you make too much money, which is a good problem to have, ensure your withholdings to ensure that you get a refund and that you don't actually owe taxes. On the flip side, if you owe taxes from a previous year, maybe there was the IRS had to go back and make an adjustment, or you weren't able to pay your taxes. If there has an adjustment that the IRS determines, they will lower your refund from the current year to pay off any previous year taxes owed. And this will actually happen before any other offset happens. So the IRS gets its money before it takes it from the other offset program, which I'll talk about as a common reason for seeing a lower than expected refund. And please, if this information is useful for you, hit the like and subscribe button to keep getting more videos. So the other big reason that some folks' refund is actually less than the amount they were expecting or provided by their tax filing software tool is that the federal government has a very big program called an offset program, or monies that are deducted from your tax refund to cover debts that you owe other federal agencies. So the IRS basically acts as a collector for a lot of these other groups, and the Department of Treasury's Bureau of the Fiscal Services, the BFS, manages this whole Treasury offset program. And this may reduce your refund and use it to offset for paying for key items like past due child support, federal agency non-taxable debts, state income tax obligations, or unemployment compensation debts owed to a state. So basically, if you find that your refund is lower than expected, these are probably the big reasons why. And so the IRS, which is under the Treasury and the Treasury offset program, is really the reason why they will grab the money from your refund before you get it. They will get a letter, you will get a letter from the IRS explaining why this was offset and why difference from what the estimate you had from your tax filing software. They will also give you an opportunity to dispute this collection, which could delay your refund, but you will have to prove that you had no federal obligations. And so this is a process in itself. And so not only can it reduce your refund, but it can also delay your refund. So this is probably the biggest reason, in the last few tax years and likely to be ongoing, that people who are expecting a big refund get a lower refund. The other one that you're seeing, especially in the last few years when there were a lot of tax credits provided by the government to address the pandemic relief and support middle class families, is that tax credit like the recovery rebate credit, stimulus checks, both for dependents and for themselves, those have gone now. There were no more dependent checks introduced in 2022 or late 2021. So what this means is people who had claimed their stimulus payments through their tax filing, you could have done that if you had a missing or underpayment, or you qualified based on the eligibility criteria, were able to get this in the tax filing, so which meant the refund was much larger than expected. That's not going to happen this year. So this means that their refund is lower. And the other one is the unemployment income tax exclusion. This was provided in 2020. So when people filed their tax returns last year, they were able to get this big exclusion. Up to $10,200 worth of unemployment income tax could be excluded off the $10,200 of income. but that's gone now. So it wasn't available last year, which means that that won't be available to people, even if they got unemployment income last year, which a lot of people did with a lot of the pandemic programs still in effect. But that's gone this year. So again, this will work to reduce the refund. Some people may have thought they would have got the exclusion this year as well, but that was not renewed by Congress. And the big one, I think that's going to affect a lot of families this tax filing year is the child tax credit, especially the fact that this was expanded and paid in advance. Despite being expanded, 50% of the payment was made last year, which means that only 50% will be claimable in this year's tax filing. So it's going to be smaller that way. But if your income had increased in 2021 again, you may find that you actually get less than the child tax credit, even less than the 50% you were expecting, because it was based on 2020 income. So the IRS, recalculates based on what you submit that your income went up, that either qualified you or lowered the qualification threshold for the child tax credit. And I have a whole link to the qualification levels here. But if your income went up, you may not actually qualify for the entire child tax credit. So the IRS can actually recover any overpayments from you through your refund payment, which obviously would mean a lower refund. The other one is if you had a divorce or a shared custody issue last year, you may have claimed the child tax credit, and the IRS would have paid you just because they would have had that dependent under you. But if you had a divorce last year and your ex or your partner claims it, you may actually find that you may have to go back and repay what was paid to you or split it, and the IRS will calculate that automatically a lot of times, and that's why you'll see a big hit on your refund if that is the situation. And then the final one, if you had a dependent change, either they filed their own tax return this year, or unfortunately they were deceased, you cannot claim that credit. And so what the IRS will do, they may have paid it to you last year in the advance payments, but this year they'll claw that back. So that'll also cause a pretty significant refund drop, given that this child tax credit was up to 3,600 per dependent for a lot of people. The flip side is if you do have a new dependent, which you could not claim in 2021, you can claim it this year as well. So that'll help you get a higher refund. But in most cases, a lot of people could see a pretty big hit to the refund because the IRS was clawing back the child tax credit. With that said, I've provided you 3 or 4 different ways of why your refund could be lower than expected. Hopefully that helps. And if you have any questions, please leave it in the comments below, and I'll put some more links to the different topics I covered here. Thanks and goodbye.